Hello, I'm Rana Faruhar, Associate Editor and Global Business Columnist for the Financial Times, and I am so pleased to be here in conversation today with Steve Case, the CEO and Chairman of Revolution, a Washington-based investment firm, and of course, the co-founder of AOL, a longtime entrepreneur investor. Steve, welcome to this conversation about the new geography of technology, something you know about.
Rana.
So pleased to be here with you. So we've got about 20 minutes for discussion, and our audience today is really interested in what's going to last from all these pandemic changes. What does this new digital world look like? And you've had a front row seat to this because in some ways, one of the changes has, of course, been this new geography in the US, but in many other countries. The geography of work is changing, the way that we're living, the way we're traveling, and certainly the way we're using technology. And something that you have been so passionate about, and I know it's what Revolution invests in, and also what the rise of the rest is all about, which I want to ask you to share with the audience, is this idea that there are many innovation hubs in any given geography. We've been in an era in which there's a lot of concentration in the US in particular. There's been about 12 cities, a handful of cities that have taken most of the wealth. You've been all about trying to bring innovation everywhere. So talk about what that looked like pre-pandemic and what's changed. And then we're going to dig in.
Well, pre-pandemic, as you just said, we've seen a real concentration in terms of venture capital and therefore talent kind of clusters around those places. The data says that last year, 75% of venture capital went to just 3 states, California, New York, and Massachusetts, 75%. So the other 47 states are fighting over the remaining 25% because that's where the capital is. As I said, that's where the people tend to go, and it creates this increasing returns momentum in those places, which is great, but deprives other parts of the country of the opportunity to have strong startups and job growth and economic growth and so forth. So we've been talking for a long time, more than a decade, about leveling the playing field so that everybody everywhere really has a shot at building a company if that's what they want to do, a shot at the American dream, and we're creating jobs and driving growth everywhere. And we really do believe, as this conference is focused on investors, this is a great arbitrage because so much capital does focus on Silicon Valley. Valuations there are high. Valuations of similar companies in other places are lower, and over time that gap will close. But right now there is that arbitrage. We think it isn't just the right thing to do in terms of backing entrepreneurs everywhere. It's a smart thing to do, and you can generate better returns. It takes more work. You have to build broader networks. You have to get on planes and so forth. But ultimately, that would be an opportunity for better returns for investors by backing entrepreneurs everywhere.
Well, you're talking about getting on planes. I know that you've been on a bus as well for several years, and I at some point want to go on that bus with you. Tell me a little bit about the rise of the rest, what it has meant, some of the companies that you've invested in, and I know that there have even been some exits recently. Yeah.
Yeah, no, when we first launched Revolution as an institutional platform was about a decade ago. Our initial focus, and still our flagship, is our Revolution Growth Fund, where we've invested in companies like Sportradar and Clear and Tempest and Sweetgreen, lots of really interesting companies in that growth phase. Then we launched a couple of years later, Revolution Ventures. And more recently, just about 3 or 4 years ago, we launched what you mentioned, the Rise the Rest Seed Fund. And so far, we've invested in nearly 200 companies in over 70 cities, alongside 350 regional venture capitalists. So we've built this really, we think, unparalleled network in terms of sourcing, understand what's happening in those cities, and work hard in those cities, partnering with other folks in those places to try to strengthen the startup community, create more collaboration and drive more different kinds of partnerships, driving awareness of what's happening in those places all around the country. And we have a lot of great investors, including some folks who are part of this conference. Ray Dalio was one of our founding investors in the Rise the Rest Fund. Also, we have people like Henry Kravis and David Rubenstein, and venture capitalists like Jim Breyer and John Doerr, and entrepreneurs like Jeff Bezos and Howard Schultz. We have a great group of people that are joining with us and backing these entrepreneurs all across the country. Again, partly because they think there is an opportunity to level the playing field and create a more unified country if there is opportunity everywhere, if there is job growth everywhere, but also they buy into this thesis that there really is a great investment opportunity because of this valuation arbitrage.
So just a few small names there in terms of your investment community.
We're grateful.
Well, and clearly so are they. Something that we've talked about in the past is the way in which when you move off of the usual hubs, the coasts, et cetera, you can kind of tap into the skill set and the old line economy that might have been in a certain city, in Detroit or in Austin or in Chattanooga. I remember you telling me a story about a company you invested in Chattanooga that had a history of logistics. It's a big trucking center,
Right.
and then they overlaid digital on top of that. And I feel like that's a message that's going to be really resonant, particularly in Europe, where there is this kind of incredibly robust export economy. There's a lot of expertise in these old line cities in the US. Same thing. How does that work? How do you make that connection?
Well, I think that is going to be the big opportunity over the next decade, what I've called the third wave of the internet. The first wave, companies like AOL were getting everybody online. The second wave has been running software on top of the internet, companies like Google and Facebook. I think the third wave is when the internet meets the real world and really disrupts some large industries, but it's going to require domain expertise, understanding how those industries, healthcare and logistics and agriculture, things like that. There's a culture to it that you need to understand. You need to have the credibility to establish strategic partnerships that are going to be critical there. So that should advantage these, what we call rising cities in these other places that have been left behind a little bit in the first and second wave, but can come back in the third wave if we have the talent there, if we have the capital there. And as you mentioned, Chattanooga is a good example. It happens to be one of the trucking capitals of the country, almost like Silicon Valley of trucking. And as a result, this company we backed there called FreightWaves has built a platform, kind of like a Bloomberg data platform for the trucking industry. Well, if you're going to do that, there's no better place to do it than Chattanooga, which is where the major customers and partners are, and there's an understanding of what's happening with the trucking and logistics industry. So it's better to build that company in Chattanooga than in New York City or San Francisco or some other place. Another company we backed, App Harvest in Eastern Kentucky, now is a public a company. They are focused on agriculture, initially on tomatoes, over time other products, using a lot of technology, including robotic technology. But actually their location in Eastern Kentucky gets them within a 24-hour driving distance for 70% of the country. So it's an advantage to be in Eastern Kentucky, which most people had given up on. Coal country, Appalachia, there's no real opportunity there. Well, there is opportunity there, and that company's gone from 0 employees when we backed it 4 years ago to 600 employees now and a market cap of nearly $1 billion. So we're seeing this happen all across the country. We're very excited what's going to happen really in this next decade as these third wave industries in healthcare, in ag tech, and other sectors start leveraging the broader regional talent pool. And I do think, going back to your original question, the pandemic has been sort of this shake the snow globe moment that people are kind of rethinking work and life. Most companies are adopting more of a hybrid structure, allowing more remote work to happen. As a result, some people, not a ton of people, but some people are deciding to live someplace else. That will result in some people who left certain parts of the country where they grew up or went to school to go to the coast. Some of those people are deciding to move back. That will strengthen those startup communities. And so that being able to keep the people you have and get the people who left back and attract more people who maybe never had an experience in that particular city, but because of something that's happening, they're attracted to it. And we're seeing this now, not just in a few cities, but a couple of dozen cities. Just this month, there's a company in Atlanta, MailChimp, was acquired for $12 billion. It was bootstrapped in part because it wasn't able to raise venture capital. And that will have a transformative impact in terms of what's happening in Atlanta. The success of ExactTarget, acquired by Salesforce, has had that kind of impact in Indianapolis. Obviously, Austin has benefited from the success of Dell. I could go down the list. There are more and more cities that are emerging as rising cities, but there's still this imbalance. I would just encourage everybody who has an investor focus to not just be looking in New York and San Francisco, but be looking in other places. That's the focus of Revolution. And I think it's going to really pay off over the next decade.
Well, it's interesting because you're mentioning the economic impact for communities. I mean, this has been one of the key challenges of the last 40 years, certainly in the last 20 years. That globalization has created a lot of wealth, but it's also sort of unmoored wealth from communities. And you've had a global economy, but you still have politics that are quite local, which of course leads to its own problems of polarization. We see that in the US, certainly in Europe. Do you see any signs that this shift, this post-pandemic shift, could really kind of solve that neoliberal conundrum and maybe start to ream more wealth? And are there any data points that you could share that really point to that yet, or are we still too early out?
No, I think there is that opportunity, and it's something I know you've been writing about for a number of years, and a lot of people have been thinking about from a policy standpoint. And I think, by the way, that's the other mega trend to watch in the next decade. One is place, this idea of the rise of the rest, where talent and capital and startups and growth and jobs and investment opportunities will disperse. I think that's going to be a bigger deal than most people think. The other area that is a bigger deal than most people think is policy. I think the role of policy, driving the disruption of different industries and figuring out ways to more broadly to kind of distribute opportunity around the country is going to be a big deal. I saw this firsthand when we started AOL in 1985. Only 3% of people were connected, and it was still illegal for consumers or businesses to be on the internet because it was restricted to just government agencies and educational institutions. So we had to work over a decade to commercialize the internet, figure out what the rules of the road should be. We're having a similar discussion now in our country around new technologies, things like crypto, and a lot of industries are being rethought because of the pandemic. We've seen an acceleration in telehealth, for example. One of the companies we back, Talkspace, has benefited from that. Another, Tempest in Chicago, has seen a real acceleration in their growth. We've seen changes in laws around sports tech create opportunities for companies we back like Sportradar and DraftKings. So policy and regulations aren't just a problem you need to deal with to enter the markets, which is the way often people perceive it, but opportunities you can seize if you can actually alter some of those policies to result in opportunities accelerating, whether it be for us in those early days of the internet or companies like Sportradar and DraftKings and Clear and others. We've seen it firsthand. So this idea of policy being front and center, I think, is going to be much more important. So I'd focus on place and policy in the next decade. To your broader question, our country and many other countries are trying to figure out, how do you kind of make sure there's a more level playing field? How do you create jobs and economic growth in more places? How do you get some of the people who left to return, get some of the people there to stay, and create an environment where startups and innovation and job growth can happen everywhere, or at least in many places, not just in a few places. And we do believe in cities. We do believe there's something to clustering, and so having a cluster of people, whether it be in Austin or Denver or Atlanta or many of the other cities that we've invested in, there is something to clustering people. But we don't think everybody has to cluster in San Francisco, New York, and Boston. We think instead of 3 cities dominating over the next decade, it can be dozens of cities, and the public policy is focused on that. Some of the work I did 7 or 8 years ago around the Jobs Act was part of that. Work around things like opportunity zones have also been, I think, helpful. And there's a lot of work now underway, including some of the legislation around infrastructure to get broadband to more communities, to create regional hubs and invest more R&D as a country, but not just in a few places, do it in a more dispersed way. So I think you'll see from this administration and this Congress much more of focus on really trying to create a broader, more dispersed, more inclusive innovation economy and move away from the model of the last 20 years where a few people in a few places did really well. A lot of people in a lot of places kind of felt left behind.
You're kind of answering and segueing into my next question, which is about, how do we do this? What does business really need from government? And you've kind of touched on a couple of policy points, but one of the big questions I have, and I've watched this as we've begun to question post-pandemic supply chains. I mean, you mentioned agriculture and your ag startup in Kentucky, or was it Tennessee? I'm sorry. Kentucky. All right, to what extent do we let these businesses and these ideas kind of bubble up from the bottom? And to what extent does the federal government or even state governments need to look and say, okay, we do have these kind of critical goods that we might want to produce. We're thinking about a new relationship with China. Top down, bottom up, what's the balance there?
It obviously requires both. Some of the top-down interventions are now being considered, as you've discussed, are trying to reshore some key technologies like semiconductors. How do we get smarter around our supply chain? Part of the problem in the early days of the pandemic is we were relying on things in other countries and weren't really making those things ourselves. So there's a strong strategic desire to make sure our country has more control of its destiny, more control of its future, less reliant on other countries, and so forth. So there's a lot happening at that level. There's also a lot happening at the state and kind of local level. Governors and mayors trying to figure out ways to create stronger kind of start and more differentiated startup communities. That it has shifted, thankfully, from a focus for many years of economic development people. We're just trying to get existing companies to move or open a customer service center or a factory or something, which was sort of a zero-sum game for the country. Now they recognize the only sustainable economic development strategy is to create a strong environment for startups to start and scale, and that's really where the job creation needs to come from, and we're starting to see that in more cities. I spent a lot of time with mayors, and more of those mayors are recognizing that they have an opportunity, maybe even an imperative, to focus more on what the startups are doing. But at the core of it, and it was part of your question, entrepreneurs have to lead the way. It's the entrepreneurs who are going to come up with the ideas. The governments just need to set the rules of the road and the playing field and create some of the investments in core technologies. Going back to my own experience with the internet, that would not have happened without government investment at DARPA more than a half a century ago. That also led to a slew of other technologies. The investment, again, over a half century ago in the effort in space and the Apollo mission led to a significant number of spin-off technologies. As a country, our R&D investment has been going down. Other countries like China, it has been going up. And that's one of the things that Congress is working with the administration to address with what was originally called the Endless Frontiers Act, to bump up the investment in R&D and also distribute it through regional hubs to strengthen what's happening in this rise of the rest phenomenon. So I think it takes all the above. Everybody needs to recognize things are happening at a rapid pace. We're seeing key industries now being disrupted in sort of remarkable ways. We need to figure out what are the right ways to set the table in terms of the policies to make sure America remains the leading innovative entrepreneurial nation in the world, and we do it in a much more geographically dispersed way within our country. So federal government has a role to play, state and local government has a role to play, but ultimately it's the entrepreneurs who come up with the ideas and are scaling the companies of the future and helping build the industries of the future.
Okay, so we've covered a lot of territory. In the last 2 or 3 minutes, what are the surprising trends that you see emerging, or what haven't you seen perhaps in the media about what the post-pandemic world is going to look like? I mean, we've talked a little bit about the shape of cities, commercial real estate, shifts in work-life balance, where people are going to live. Push that forward a little bit. What do you think we're going to be talking about in 5 years if we were to do this session again?
Well, I think the two key planks I mentioned, place and policy, I think are going to drive this next wave. I think it's going to the innovation that has been focused on a few industries is clearly now accelerating across many industries, and that most of those industries are up for grabs in this third wave, such as healthcare and food and agriculture and fintech and so forth. There is a policy aspect to them that we didn't see as much when the second wave was social media and other kinds of business. Now that they're really big, there's some policy focus on it, but it wasn't really critical in terms of getting going and really scaling the businesses. So I think the entrepreneurs, the investors need to understand that we're moving into a different zone. It's going to require a different kind of entrepreneur. It's going to require a different approach to investing, much more partnerships between the young companies and established companies, much more engagement on the policy level. And I think that's where the big breakout companies of future are going to be. They're going to be in places that people might be surprised by, and they're going to be engaging on the policy front in ways that weren't true in the last decade. One example, a company we backed in Chicago, Tempus, just started 5 years ago, now scaled to 2,000 employees. The last round was an $8 billion valuation, focused on precision medicine, and hundreds of data scientists. And that company is not in Silicon Valley. That company is in Chicago, and it's scaling in part because of the partnerships it formed with hospitals all around the country to aggregate their data, and partly because of their engagement, serious engagement on the policy front to really influence health policy. That's going to be the model for the future. It's not going to be coming up with a cool app in your dorm and stick it in the app store and striking gold.
That's funny. Yeah, thinking about Chicago again, blending that old economy, new economy thing, healthcare being such a driver now. Well, I have to say, I wish you all the best. I have a real personal stake in this, having grown up in the rural Midwest and had a dad who was an engineer and a small business owner. And there's just a tremendous amount of talent in these places that is underutilized. And I think you're going to do very well mining it.
Thank you very much. Appreciate it, Rana.